Hi, everyone. Thanks for joining me here today. I'm Mark Phillips, and I'm the producer of the Tape Report, as well as a principal over at Harvested Financial. And today, we're going to look at the Tape Report's fixed delta spreads. But before we get into that, I just want to remind everyone that this is not financial advice. The purpose of this video is only for educational and informational purposes. If you have any questions about that, please visit my website at harvestedfinancial.com and check out the terms and conditions there. So with that out of the way and without further ado, we can get into the fixed delta report. So it was one of the newest additions to our lineup here, and I'm pretty excited about what this does and some of the opportunities that it highlights. So when you log into the tape, you'll find the home screen here. We've actually updated this recently to include some links to the tutorials, this one being one of them, as well as a sign-up link for all of our different reports and analytics on the homepage. And then there's a quick start guide for if you have any questions about when you first log into the tape and how to navigate it, change some settings and stuff like that. So the goal of this report is to find spreads that are expensive or cheap compared to other volatility models. So we know the most important component in an options pricing model is volatility. We can fix the days to expiration, we can know the strike, we can know what stock is trading at right now. Interest rates are relatively static, little asterisk on that one specifically, but for the most part, implied volatility can even be referred to the price of that options, how much the price of implied volatility has changed. So if we're looking to compare spreads over time, we might want to say, what was this spread with an implied volatility from this other model or this other time compared to what it's priced at today? So when we compare against other models or other curves, we could say, given a theoretical volatility model, where should this option spread be priced? Or given a historical model like yesterday or the 10-day average, what is this spread priced at now versus that? Are we cheap or expensive? And so the term fixed delta specifically comes in because when we compare these spreads, we have to adjust for the fact that stock might have moved and time has passed. So when we say the 40 delta, 30 delta option, in Apple today, that might be the 170, 172 strike. So when we look at that 170, 172 and a half strike, we know that that's the 40 and 30 delta option. What were the 40 delta and 30 delta options price stat in other models? So then we can say this spread is $1.22 using the current implied vol, but it would only be $1.20, say, using the different volatility model. So that's what that fixed delta is. We're comparing a fixed delta because that's a normalized comparison over time. All right, so let's dig into the report. We can navigate on the left-hand side here and head over to fixed delta spreads. So the first thing we want to look at is when this was last updated. The way this report is structured is that it goes out every 15 minutes and scans the options markets and runs a bunch of spread calculations. So it takes the live prices that are updated every 15 minutes and then runs the comparison calculations on it. If you see that the update time is yesterday in this case, today's Halloween, happy Halloween, we might want to go in and refresh that. So we are going to refresh our data. And one thing also to note about the data here is that it only scans for the top 250 most liquid names in the market. And we focus on those 250 names for sort of two reasons. One is they provide sort of the best data structure. They have the most granular expirations and strikes, and that really allows us to make a lot of these comparisons over time. And the less liquid names, there aren't as many expirations and strikes listed. Liquidity also matters for execution. So that's reason number two, is that we want to make sure that we're looking at spreads in names that are easy to trade in and out of. We don't want to get into something that's going to be really expensive and kind of swamp our edge in the first place. So looks like our data updated, and we are now looking at the 10 o'clock run or 10:01 run of the fixed delta spreads. That's great. The spreads are divided into 5 different categories. So we have verticals, we have butterflies, we have straddles, strangles, and condors. Within categories like verticals, we actually have some subcategories that we have at the monies, out of the monies for both calls and puts. For some of the butterflies, that's only going to be at the money. Strangles, we have 2 different delta ranges for the strangles, and we're going to be continually adding more spreads and spread types here over time. So this is looking at all tickers right now. You can also go ahead and then filter specifically by ticker too, if there's something you want to look at. a specific name that you're focused on. And within the ticker filter, we'll get a nice look at this at the money vertical across 4 different expirations. The different expirations we use here, we use the next 4 or 5 expirations in weeklies. And then in the index names, so in SPY and QQQ, we use, those are ETFs, but they're based on an index. We use all of the dailies in the first 2 weeks and then the weeklies after that. So we're looking at Apple at the money call verticals here. We can see that all these values are actually increasing because we've got our increase filter. If I go to decrease, it does look like that far December expiration is actually down slightly. It's only down a penny, but it is down. So that's where that 5th expiration comes in. So I'm looking at this at the money call vertical that are increasing in Apple. And I'm comparing it against yesterday's value. So when we talk about those different models or those different historical versions of volatility, that's really the main axe that we're doing here. We can filter by ticker and price and whatnot, but are we comparing against yesterday's volatility, or are we comparing against sort of the 10-day average of what that vol curve looks like? And so if I flip between 10-day and yesterday, you'll see this value 10-day and 10-day change. That'll become yesterday if I go to yesterday's comparison. So we can see that this Apple call vertical, we have the ticker, we have the stock price, we have the expiration date that we're looking at, our long and our short strike here. So this is going to be the 170, 175 vertical. That vertical length is going to be determined by the stock price. So in the top tier indices like SPX and NASDAQ, that's going to be $20 wide. Everything else over 100 is going to be, over 50 is going to be $5 wide, 250, $1.50, as we go down those tiers. So we're looking at the 170, 175. In the near-term expiration, that's the 45.22 delta. For at the monies, we look to find the vertical on the strike closest. So we start the long leg closest to the money, and then we go up that pre-described range. In the out of the monies, we target the long strike as the 25 delta, or strike closest to 25 delta out of the money, and then add that additional $5 or whatever on top of that. So we're looking at the 170, 175, 45, 22. We ran 45 and 22 deltas on our old models and got $1.73 compared to yesterday. We see this vertical trading at 189. Apple's down, I believe, almost $2 today. So that kind of makes sense that we are seeing the price of these verticals go up as volatility is increasing. And in the front month, that volatility is increasing to the tune of 16 cents. So we can look at verticals here. We can identify opportunities for what's getting cheap and expensive against our various benchmark comparisons. So in addition to verticals, we can also look at butterflies. So if this comes up empty, one thing to always check is, what are my filters doing? So I'm guessing this is a price change question because, like we said, volatility is increasing in Apple as stock's going down. So that's actually going to raise the cost of our verticals, but it's going to drop the cost of our butterflies. It's one of those counterintuitive things about butterflies. You're short volatility for a debit that will go down in price as volatility goes up, and up in price as volatility goes down, because you want it to center right at the middle of your butterfly. So we can look at our butterflies across time. I've actually gotten crushed. Wow. So the at the money butterfly in Apple is down 50 cents. Short-term vol is really getting bid up here. But we also see across the curve that these butterflies are dribbling down. It's actually all centered around the same place, but of course they'll have slightly different deltas as we go out in term structure. So that's a nice handy feature to have that delta there, just to give you an idea of where in sort of probability space this fly might land. You can also look at straddles. No decreases in straddles, only increases for Apple with volatility up. So front month straddles up about 90 cents, and across the board, the 170 straddles are all up. If we look at the strangles, I'm going to guess those are up also. So as a reminder, the strangle is similar to a straddle, but instead of selling the call and put or buying the call and put at the money, we're going to go a little bit further out the wings. So we have both a strangle 30 and a strangle 15 here. That suffix refers to the number. So are we looking at the 30 delta strangle, or are we looking at the 15 delta strangle? You can select that spread type just over here. So looking at 30 delta strangle, you can see our call and put deltas are right around 33 in the front month. Again, it targets the closest strike possible to that 30 level. Might be a little above, might be a little below. All depends on sort of the granularity of those strike listings. But we have our 34 delta strangle here. And that is going out to the 165, 172 strike. In the front month, it's going to be a little wider as we go further out in time. And the prices increased across the board again. Vol's up. That strangle's gone up quite a bit, 84 cents. So some of these spreads can really move around a lot, and even a name like Apple, that's one of the relatively big mega cap stocks in the market, we can see decent price changes in some of these spreads and creates a lot of opportunity. Finally, condors. So the condor structure, as a reminder, is it's actually technically the iron condor here that we look at the call spread and the put spread, where we take the 25 delta call spread, 25 delta, 20,5 delta put spread on the downside, and calculate that price. And so again, it'll show all the different strikes here. We can see that in Apple, that condor is from 175 to 182 on the call side, and then from 160 to 152 on the put side. So Delta's targeting right around 20 and 5, and those condors have also gone up. So in some ways, condors are as much a measure of the wings as in the way that the straddle is the measure of the at-the-money volatility. The last feature that I'll just highlight, if you're looking at all tickers, so this is good if you want to, you're looking for cheap opportunities. Maybe you're looking for the cheapest spreads in the moment. That should always be sort of followed up with some fundamental research. But broadly, if you're looking at all tickers, just by virtue of their price handle, a name like NDX is going to show up all over the place here. It is sorted by the largest changes. But if you want to isolate your stock range to only focus on some of those smaller value names, BITO's blowing up the low end, something's going on with Bitcoin. But then you can also limit the number of results you get to, say, only the top 25. Because if you start including all prices here, that's going to spit off quite a few different spreads, especially when the market's only going in one direction. So, just some of the other filters you can use and some of the ways you can approach this report, either as a, hey, I've got a thesis about Apple. What are some of my best call and put spreads? Maybe I want to get short a put vertical because I'm bullish, because I like credit trades when they're expensive. Or maybe I'm bullish and want to buy cheap call spreads. Ball's up in Apple, so there's not much cheap today. But depending on where the market's going, what your thesis is, how that vol curve is moving, those are all the different things that the tape is trying to tell you about how to match your objectives to the opportunity in the market. You can also look at it with the approach of, hey, what's really moving today? I need to see what activity in the market is driving some of the biggest price changes. And I want to look at all tickers. I want to look at 20 to 50 bucks. I think that's a sweet spot, and see some of these biggest changes in condors, in out of the money verticals. Maybe we want to buy, some flyers here. So some of these cheap call spreads, I might see in DraftKings 42 cents for a $2.50 vertical, a long delta, the 27 strike, 27 delta, 29.5 strike, up $3 by the end of the week. I don't know. That's up. That might be a sale, or, that might be a buy too. So, this doesn't necessarily tell you what to do, but just highlight some of those extreme examples of what's going on in the marketplace. There are a lot of different ways that you can use fixed delta spreads. In isolation, it's great as an opportunity identifier and a way to look at specific strikes that are moving in the marketplace. It's also a great complement to the rest of our reports, where using the fixed delta spread alerts to find some of the biggest movers, you can then dig in with stable skew or VRP to really understand what's going on with the curve. Packaging all these reports together gives you the best insight into understanding the full picture of how opportunity is shifting and changing in the options marketplace. So thanks so much for looking at this. Thanks for checking out the report, watching our video. Make sure to hit subscribe and like below, and check out some of our other videos too. There's a ton of opportunity out there in the options marketplace, and we're here to help capture it.